I'll be covering just some issues of what we describe as the protection gap, or underinsurance is the other way of calling it. So I'll go over how big it is, the shortfall also in property insurance, the non-catastrophe property losses, and how do we deal with underinsurance as an industry. So how big is it? So in the last 10 years, 1.2 trillion of uninsured catastrophic losses, a big number, about 70% of all losses. 523 billion were insured losses over the last decade. This is from our latest Sigma report, came out in March. So a big set of losses. When we look at what type of things are less insured, earthquakes tend to be the least insured of the major catastrophes, followed by floods and windstorms. Even windstorms is only 55% are uninsured of the losses from windstorms. Less than half are insured. When you look across the world, of course, it's the less advantaged, lower income countries, the emerging markets, that are particularly vulnerable to catastrophic losses, in the sense that they have very little insurance. When we look across the big losses and the big potential losses, however, it's US, Japan, and China that have the hugest potential uninsured losses. And you'll also see here that China has very little insured losses. Japan has not that much. They tend to government insure the earthquake losses, and the US has quite a bit, but still has more uninsured losses than insured losses. So a major deficit and a major opportunity also for our industry to provide more insurance to more companies and households. We also did, in this Sigma came out last September, an estimate of non-catastrophe losses, and you find it kind of interesting that the non-catastrophe losses are actually smaller by our estimate of trying to be reasonable in this area than the catastrophic losses. So every year we have, like this year, we'd have about 153 billion losses from catastrophes on average, expected, given a natural catastrophe average loss year, that would be uninsured, but 68 billion for non-catastrophe losses, about less than half of the catastrophe losses are property losses that are uninsured. And how do we get this uninsured property losses? Just quickly, we have this thing called the S-curve. It goes by income level along this line and penetration rate, property penetration on this line. And as you move up on the income level, you have an acceleration as people buy cars and houses, and have a steep slope in between, and then it levels off for the more wealthy countries, and very low insurance rates, penetration rates at the low end. We split this into 3 income categories, and then said, well, who's the best practice, or what's a good, reasonable practice for insurance? Because some people don't want to insure; they feel comfortable without it, so then we took each income level up to this dotted line, and then calculated the full set of losses on the non-catastrophe property losses. So how do we deal with this? So what do people do? Some people are completely uninsured. Some people are so wealthy they don't need insurance, but mostly the uninsured are less well off and feel they can't afford insurance. So this is a challenge for finding products for this income category that they can have affordable insurance. Insured for certain perils. Sometimes people will be in a floodplain. They love being in the US, we love living in floodplains. And many countries is the same, because you're on a river and it's pretty, or you're by the ocean and it's nice, or you're by a lake that happens to sometimes flood over. And that makes it expensive, and so we don't have a solution because there's no mutuality. It's so expensive, people don't want it, they want to self-insured. Restrictive policy terms, we have to be very careful about what we provide and what we don't provide, and this comes down to some insurance also. Sometimes people insure for their house, and it's a $100,000 house, and 5 years later it's worth more, and then the catastrophe hits and they're undervalued on their assets, and the payout is less than the value of replacement. So that's another form of underinsurance. How do we get rid of the problem? We do need to work with government. We have to have a proper regulatory environment. We also look to the government for mitigation measures. It's very hard to insure floods, as I mentioned earlier. And of course, if you have a flood mitigation measures, dikes, and these kinds of things, it makes it more affordable to insure. In addition, we have to increase our access to the various markets through the internet, the mobile phones. Mobile phones are very popular now for insurance in Kenya, for example, for health insurance. So some markets work only with mobile phones. Others work better with internet. In many countries, of course, it's still the agents that are very important because people want to have the trust and understanding of the product. We do need to improve our product design so it's simple and understandable and affordable. And we do need to give a better price when there is mitigation and better building standards and better zoning. I won't go over all these kinds of options of how things get done. I do like to point out microinsurance because it's for the least well-off individuals in our global society. For example, we have microinsurance products for livestock in Kenya, where if there's a drought in the area and you have 10 cows or sheep or whatever, you can get a payout per animal if the drought is so severe that the expectation is these animals will not survive. Here we're trying to put in place a crop insurance in Romania in a microinsurance, and it's based on a parametric trigger. It's based on weather information, not on how much you lost in on your farm. We also need to have new technologies and distributions to be better to reach more markets. In the more advanced economies like here, you have to have something perhaps for the internet, for the younger people who are more active on the internet. And we also need, as it says at the bottom, to work with the governments perhaps on mandatory measures. Some countries have mandatory earthquake, mandatory motor is very frequent, but of course you have to get people actually signed up for these mandatory, so that's working with the government on that. So conclusions. It's a nice, quick, short talk, or get to the conclusions. So 153 billion each year of NAT cat losses are uninsured. The challenge for the insurance industry to focus on the needs of those that are insufficiently or totally uninsured. Government support through sound regulatory environment, mitigation measures are very important for success. And we do need to be innovative in our way we approach clients. We need to be client-centric as the latest buzzword, of course, consumer-oriented in our approach to them and in our products and processes so that it's friendly to improve our trust, as was mentioned by one of the speakers earlier in the morning. So, thank you very much.